Everybody, this is Jim at SP500chart.com. It's about 4:45 on March 7th, 2013. Another day of the market's stubborn refusal to take a breather. And we're going to look at that. But before we do, I need to remind you, as always, that the website and the video are for educational purposes only. Nothing stated in the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I don't want to misrepresent myself. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So guys, I think this is probably the most pertinent chart to what we're looking at here lately, and that is this channel extends all the way back to that gap up on January 2nd of 2013. We were in this channel through late February when we broke down underneath it, back tested, made another dip down, came back to the same level as the back test, came down not quite as low as the previous dip on the 21st. We identified this as a potential inverted head and shoulders pattern, and that pattern broke out on March 5th. So, what are we looking at? And broke out with a gap up, which always just burns me because it makes it so hard to trade. So you typically wait for a pullback. So you wait for a pullback down to this breakout level, and I hope we still get that. There is a chance we do, but I'll be honest with you, there's a chance we don't. And if we don't, then you just have to take that into your equation of what your risk tolerance is. If we get a pullback without having first reached 1560, then you have to think that with the reliability of this pattern over not just the past 4 years, as we've seen probably at least 4 or 5 inverted head and shoulders patterns since March 9th, 2009, which, by the way, was the bottom of the granddaddy. We've seen almost all of the inverted head and shoulders patterns work. Matter of fact, I don't know that I think we saw one that looked like it might be, but then it just like this head and shoulders potential topping pattern where I thought this was a left shoulder, head, right shoulder, just like we saw that kind of morph into something else, we saw another pattern do the same thing with an inverted, what looked to be an inverted pattern turned into a top. But anyway, it wasn't a confirmed pattern because it never broke down. Just like this never was a truly confirmed pattern because we never got at least 1% underneath this neckline. Now, does that mean to say if we had made that full 1% move down, then we wouldn't be here? No, I'm not saying that, because I've seen patterns that look perfect. They look like textbook cases, textbook examples, and and you see them break down. You think this is perfect. You wait for the pullback. You place your trade, and then they just keep going up. Or you wait for the pullback on an inverted pattern, you place your trade on the pullback, and they keep going down. But on average, the best way to do it is to get a pullback and then wait for it and then trade on and return to that neckline. But my concern is, as I've pointed out in the notes to yesterday's video, my concern is that we may be dealing with a different kind of market here. And just as bottoms tend to create irrational selling, frankly, tops, if we're near one, tend to create irrational buying. So that's what happens. We have seen at times in a very orderly market in the S&P, in the Russell, in the Dow. But here lately, there have been a lot of patterns that have either broken out early, failed to pull back. It's as if the market is sort of being pumped up right now with a jolt of enthusiasm. And since we know that a stock chart, well, let me put it this way. In my way of looking at these things, and it may just be me personally, I don't see a stock chart as just a record of price movements. I see a stock chart as a record of human psychology, because that's really what we see in a stock chart. We see a battle taking place between those who want to risk for gain and those who want to avoid loss. So as we see that battle back and forth, there's a point at which the tide begins to turn. And when that happens, it's typically because one side has given up. At a bottom, the bulls have given up. They cash it in. They say, I can't take the pain anymore. At the tops, you have, in addition to the bulls going all in at the last minute, you also have capitulation by bears. So you got two things at tops that have a tendency to create a swell of unbridled enthusiasm. So for that reason, I think that may be why we're not seeing very many pullbacks. So that said, we are dealing with this channel. You can see that even though we've gotten a little bit over this bottom resistance line, well, I say it's resistance now. It used to be the support line while we were in between this channel, but it broke. And so far, it's been serving more as resistance, which is typical. However, where we are with the clear enthusiasm and the clear buyers who seem to be lined up for any little dip, it wouldn't surprise me if the fact that we're hanging around this line right here makes it look like there's this struggle that's taking place right on this line. Now think about it. What did this line used to represent? This line used to represent the point at which buyers would come in. Okay? Sellers could take it down to this line, then buyers would come in. Sellers would take it down, buyers would come in. Sellers take it down, buyers come in. Sellers take it down, buyers come in, sellers take it underneath it. Buyers bring it back up to it. Sellers hit it pretty hard. Buyers come back. Sellers hit it a little less hard. Buyers bring it back to this line. So I think all of that, I know that sounded kind of strange to narrate it in that terms, but it looks to me like the struggle has been to bring it back to this battleground. And this battleground is rising, so one would expect that it should at some point fall. If it does, I would look for the buyers to come back in at 15 and a quarter, 15.25, where sellers ruled the day on two occasions. Now we're above that. So now this becomes a new battle line. But since we're coming at it from above, there should be support here now. Just like this used to be support. Now we got underneath it. Now it's providing resistance. You can see it looks to me like the S&P wants to get up above this line. And and the shape of this inverted head and shoulders says we should make 1560. But this line is putting up a fight. And I think I mentioned that back earlier in the week when we had that breakout. You know, I would expect this to put up this line to put up a fight. But I still think 1560 is going to happen. So there's two ways it can happen. There's a good way, and then there's the way that may lock us, or may lock you or me both out of a trade. The good way would be the market maybe trade sideways for one more day, then we break this blue line and we come back down to 1525. Maybe we get there in 2 or 3 days. Then we start a new journey up, and within about a week, we're up to 1560. So in other words, we come up here, can't break the line, come back, regather strength, then mount another attack and get up to 1560. That would be great, because if we come down to this line, it's a good opportunity. It's an easy opportunity to get into a long position, knowing that the odds should be in your favor. Now, what if there is a successful attack on this line? Well, we might hit 1560 tomorrow, and in which case you don't get that nice trade opportunity, which is unfortunate, but sometimes it works that way. So going forward for trading on March 8th, 2013, I've drawn this little line here, which is at, let me get my cursor to work. Come on. There we go. It's at about 1545 and change. Call it 1545. Get above this line, then this little pattern here may be serving as a bull flag with the flat top. And that flat top, that's a nice favor the market has done to us, because you get decently above 1545, then I think the handwriting's on the wall. I doubt we'll get above this blue line, but you can easily see that we don't need to get above the blue line in order to make that target. So 1560 still the target. The question is, do we just get on up and get there, or do we get a pullback first? If you're asking me what my vote would be for, I think you know. I want the pullback. But I don't have any evidence at this point that it's necessarily going to happen. Look how we're just meandering right around that bottom line that should be resistance. It's as if a little bit gets it above it, then a little bit takes it below it. We're just really fighting that out. So think in terms of, this is obviously a 3-day long area of congestion. If it is a continuation pattern, then we'll start to feel pretty good about that once we get above the top line here. Excuse me. If it is a reversal, then obviously this line will break, and if that line breaks, then likely pressure on this line, and if that breaks, then I think we probably get picked up at 1525, come back to back test this red line again, maybe, and at that point that should be getting that 1560 as a done deal. So that is the video for March 7th, 2013. I want to thank you for watching. I do hope that you feel you get something useful out of this. And again, my goal here, the last thing I want to do is tell somebody what to do with your money or with their money. That's not the goal. The goal is, I've seen these charts for a long time, and it's interesting how well these things seem to play out. So I hope you take this as an educational thing to almost in real time, because if you subscribe, you get this the day of the close that this talks about. So all that to say, I don't want to boss anybody around and say this is what you need to do or this is what you need to do. That's not my style. My style is, here's the chart. This is where there's resistance. This is where there's support. This is what will likely come out of this pattern. Now you make up your own mind based upon your tolerance for risk and based upon what you know. So with that said, thanks for watching and take care.